What is going on today, YouTube? Today, I'm going to go over some basic stock market terminology. I'm going to go over these terms here, show you examples on TD Ameritrade. If you like the video, if you're new to my channel, I make daily stock market videos. If you like this kind of content, leave a like on the video, comment below if you have any questions, and share it to someone else that could use it. So, alright, to get right into it. These are the terms I'm going to go over. And first one is an ask. Your ask price is whatever price. Well, first off, when you buying and selling a stock in the stock market, this is just the S&P, but someone has to be willing to sell their shares for you to buy them. So that ask price is the lowest price someone is willing to sell their shares for. So if the market was open right now, I could show you on a stock, but you always see an ask price and you'll see a bid price. Bid is the highest price someone is willing to pay for that stock, and the ask price is the lowest price someone is willing to sell that stock. So just to show you on like the S&P 500 index up here, that 2752 is how much it's going to cost to buy one share. So that would be like the ask price right now, but it's not going to be the same because the market's not open. A bear. Bear is when stock prices are going lower. So this would be an example of a bear or a bear market. If you're in a bear market, the market is consistently going lower over months and months of time. So if you ever hear the terms bear, that just means the stock is going down. Now, opposite, a bull. If you ever hear someone say the stock is bullish right now or it's bullish, it just means it's rising. Bearish, it's falling. Bullish is it's going up. So right now we are in bullish market. So bear market, bull market, same thing. Just the whole entire market, like the S&P 500 is going up in a bull market, and it's going down in a bear market. Your stocks are bullish or bearish, depending if they're going bullish, is they're going up, bearish, they're going down. Bid, like I said earlier, it's the price someone is willing to purchase the stock. Blue chip stocks. If you ever hear, it's a blue chip company. This is just a company. It would be something like Apple. Blue chip stock like Apple, it's consistently paying dividends. The dividends are keep on increasing. The company's in good standing. So the company has solid earnings. Company keeps on paying dividends consistently, and they have a good balance sheet. You can find the balance sheets under SEC filings. I have other videos on that. Go check them out if you want to. But another example of like a blue chip would be Amazon. Just companies that pay dividends, keep on increasing earnings, and they have a good balance sheet. Next one, book value. Your book value of a stock, it's found in the SEC filings, but it is just your liabilities minus your assets. And that gives you the book value of the company. Liabilities are stuff that's costing the company money, and the assets is everything a company owns or even the profit they're bringing in, the cash they have on hand. Anything that's positive can make the company money. Your brokers are just like TD Ameritrade, this platform I have back here. TD Ameritrade is a brokerage, and they are the ones that approve your trades. So you want to buy a share of the company, you have to go through a broker. TD Ameritrade, most common ones, TD Ameritrade, E-Trade are probably the two most common. I mean, Robinhood, it's even a brokerage, and when you buy or sell a stock, they get commission fees. So per trade, when I buy any shares of any company, I pay $6.95. When I sell, I pay $6.95. That's just for TD Ameritrade. Different brokerages have different fees. Dividends. Dividends is when a company pays you money. So you see Apple, dividend of 57 cents. So that a dividend, they pay you 57 cents per share that you own. And they do this every quarter. So you'll get dividends 4 times in a year. See 2015, 1, 2, 3, 4. DJIA. It's just Dow Jones Industrial Average. It's kind of like the S&P. It's just the overall market, what the overall market is doing. So earnings profit, that is the amount the company is making after all expenses are taken care of. So again, we'll go back to Apple. You can see earnings on this here. Earnings is $1.42 per share. That's their reported earnings. They have to report their earnings every quarter. Income, revenue, sales. This is just the amount of money they're making off of their sales. This does not include how it's different from profit and earnings. It's because profit, earnings, all their expenses are taken out. But their income, revenue, and sales is just the amount they're making off of selling their product, not taking out any of the costs they had to make their product, ship their product, anything like that. Marketing costs, anything. Market capitalization is company shares outstanding times their stock price. So if you go into the SEC filings, you can figure out how many shares outstanding, which is just the amount of shares that it's available to the public Apple has. Multiply that by 172 and you get the market capitalization. It's what the company's value is, basically. Mutual fund is just someone that's actively trading stocks and that charges you a fee to actively trade their stocks. And hopefully, since they're actively trading their stocks, their profit is going up, and then you're going to get back a better return for whatever you invested in that mutual fund. But you just have to watch mutual funds because some of them charge you high fees for their actual return. PE ratio, that is a company's profit divided by their earnings. Securities. Securities is just a fancy word for stocks, bonds, and bank deposits. Spread. The spread is the difference between the ask price and the bid price. So say a company, or say a stock's ask price is 7 cents higher than its bid price. That's your spread, 7 cents. A stock is just a portion of a company. So if you purchase a stock, you own a part of that company. Volume is how many shares are traded in a day. I can't show you guys the volume right now because the market's not open, but just how many shares are traded in a company during that whole entire day. And last, the yield. The yield is it's a percentage value that relates the stock price to its dividend. So you take the stock price, divide the dividend, and you get the company's yield. So that's it for the video. Just wanted to show you guys simple stock market terminology. If you like this kind of stuff, leave a like on the video, comment below if you have any questions, and share it to someone else. And if you like this kind of content, subscribe to my channel. And I will see you guys tomorrow.